Diana Smallridge, welcome to Trade Finance Talks TV.
Thank you.
So here we are, Exim International 2020. Let's start with an elevator pitch. Who are you, where are you from, and what do you do?
Well, my name is Diana Smallridge. I'm president of International Financial Consulting. We're a firm focusing on the export credit market, working with the institutions, the ECAs, the private market, the development finance institutions. So we're all about the institutions being better at what they do and better outcomes for developing countries.
Great. So let's take it down a notch and let's start with some definitions.
Yeah.
What is an export credit agency?
Aha. Well, I've been associated with them for 30 years, so I know them well. So an export credit agency is typically a government-owned or government-backed financial institution supporting national exports. So you have a government that says trade is a priority. What government doesn't believe trade is a priority? So what are the instruments to support trade? Well, you can have trade policy, you can have free trade agreements, but financing is critical. So access to financing. So an ECA, or an export credit agency, provides financial support to their national exporters.
Yeah.
And that can be done by providing financing to the buyer. So in a developing country, let's say you're Bombardier selling aircraft, that buyer, Rwanda Air or any airlines, will need financing. And so an ECA will provide the support for a commercial bank to finance and then provide a guarantee. So that's one area, or working capital for the exporter, but it's all around national companies having access to finance and getting their deals done.
So private insurance, where does the private insurance market stop and where does the EC market start in terms of helping those exporters?
Well, I wish that was an easy question, because it's fair to say that there is tension between the two, and many ECAs have a mandate not to compete with the private market. In some instances, to be insurer or lender of last resort. So they need to see that the deal has been turned down by the private sector. But in reality, there's great capacity within the private sector insurers and, of course, lenders to take these difficult risks and on longer term. Whereas credit capacity used to be limited to short term, you see the private market with risk appetite 7-10 years. It's surprising. So in ECA, it's so important that they be attuned to the private market and work with the grain of the private market and not crowd out. And take that into account when they're doing deals to see, is there possibility to catalyze or crowd in the private market.
Okay. And do ECAs differ from country to country?
They do. Maybe for that point alone, you have some ECAs who are mandated not to compete, and that's evidenced by them literally knowing that the exporter's been turned down. And that may be, there's a few models like New Zealand or the US for that matter, whereas other ECAs are much more proactive. They're acting as catalysts, so they're going out ahead. And a model like Canada, EDC, is one in which they're trying to open markets for exporters. The more classic model, which is the European model, generally speaking, is a responsive model. So the exporter of the bank comes and says, we have this transaction, would you provide us a guarantee?
Okay. We also hear lots about multilateral development banks, MDBs. Can you explain to our audience what an MDB is and where they sit in relation to ECAs?
Well, an MDB, a multilateral development bank, is like, well, the World Bank is the grandfather of all multilateral development banks, but of course there's the Asian Development Bank, the African Development Bank, the Inter-American Development Bank, the European Bank for Reconstruction and Development, the European Investment Bank. These are all African Development Bank. Did I cover that? These are all multilateral development banks with both OECD member owners as well as developing country member as owners. There are other regional development banks that are solely owned by the member countries. They play a critical role, not least because they have what is referred to as preferred creditor status. By virtue of their mandates and their charter, and being owned by these developing countries, if there's ever a problem, a payment problem, a project problem, they can go to the governments and say, hey, you own us, don't screw up. So it's really important that they carry this extra layer of protection that a national ECA wouldn't have, and certainly a commercial bank doesn't have.
Yeah, okay. And we often hear about the trade finance gap, the $1.5 trillion trade finance gap, which probably refers more to the shorter tenor trade finance field. How do ECAs help with assisting or alleviating some of the problems around the trade finance gap?
Well, let's just acknowledge the gap is huge. And the gap is huge not just because of risk, but for compliance reasons. And I'm sure your audience is well aware of the KYC compliance regulations around that and what that's meant for the ability of global banks to actually do business with smaller countries, smaller banks, smaller customers, just because of the KYC costs. So ECAs generally, there's no general actually. Many ECAs do not operate in the short term. In Europe, there's a strict law around a directive under the European Commission not to compete in the short-term private sector. However, with this trade finance gap, that's caused by regulation. You end up having this unfilled market potential that I think ECAs have an obligation to recognize and fill. It doesn't mean they come rushing in and stymie any private sector activity, but I think ECAs themselves need to be really examining what can they do to support that. If it's setting up a registry to a KYC registry, there's lots of ideas that can be considered, but it's understanding what's the problem, why does it exist, and how can they best fill it.
Yeah, great. And I think another offering that is regularly talked about and discussed on your panel session this morning are the Sustainable Development Goals, SDGs, and how ECs can play into the SDGs. First of all, why is this important?
Yeah.
And second of all, what are ECAs doing to address the SDGs, which we've heard of from Davos 2020, etc.?
Well, as I just said on my panel, which you featured in your LinkedIn, the SDGs, I've heard of them being called the world's to-do list. And I really like that concept. And that means governments around the world have signed on to these. And that means government agencies like ECAs have to pay attention. But the ECA, an ECA typically is in the business of supporting national exporters. That's their mandate. That's the one thing they need to do right. That's not to say that because that's the one thing they're doing, there isn't additional things. It is, in fact, the case that they are contributing significantly to the SDGs. When they're supporting, Denmark is supporting a wind farm project in Africa. Not only is Vestas or whoever benefiting and jobs are created because of it, but my goodness, you see reduction in greenhouse gases, you see employment, you see access to energy. You hit a lot of SDG goals, so why not pay attention to that and be quite deliberate in certainly counting or paying attention, measuring your impact towards the SDGs achievement.
Great. Diana, for ECAs all around the world, given the current volatility and uncertainty in the current situation, what do you think are the key themes and also watch-outs for ECAs as they look forward to the rest of 2020?
Well, if you're talking about OECD ECAs as opposed to the BRIC, I think that's still an issue, is how do we coexist with the developing country ECAs who aren't subjected to the OECD arrangement, the rules that were set 40 years ago for OECD ECAs, and I won't get into the detail of that, but it's not a level playing field. And so the question of unfair competition, that remains an issue for ECAs. And the US Exim puts out an annual competitiveness report, which is an important read. I think secondly, this movement towards SDGs, you're a government-owned instrument, pay attention, that's happening. This is the first time we had a panel in 30 years at XCRED on SDGs. It's to remain. We will continue to have those panels, I think, every year going forward. The risk environment, I mean, this is a business about risk. Credit and political risk insurance is insuring against risk. And the idea that an insurer should know a little bit more about the risk that they're assuming than the policyholder. But nowadays, I mean, we're in the midst of an uncertain economic situation with COVID-19 impacting China, impacting supply chains, impacting transportation routes. I mean, we're seeing, and it's early days, who knows what's going to happen. So ECAs, back to their mandate, they have a job to facilitate where market gaps exist. These market gaps may be more than just systemic that we hear with the trade finance, short-term trade finance. They may be now just episodic, temporary, and they need to come rushing in. They have in the global financial crisis 10, 12 years ago. They did during the Asian financial crisis 22 years ago. The time has come. They need to come back into the market and be very thoughtful about it.
Diana, look, thank you very much for joining us on Trade Finance Talks TV.
Pleasure.
Great.